So what exercise is it? Exercise 16. We want to use for Canada.
Now this is page 3.
Exercise 16, page 3.
Section of attachment.
This was the one. It depends on how much you get everything on Canada. I could not. So I go to the hospital. I go to just I can be. It's a bit too scratchy for me.
Wait, say, I didn't bring the book with me.
Yeah, I don't have a. But anyway, this one just one page, one per. You can write in the book.
We're not running. All right, stick. If you want to green.
You want terrible paper? Some checking.
Drop it off. No, wait, I take it.
It just needs to be very well.
It's good.
Yes. Oh.
It's good. Well, it's good.
Wait, that's.
You're not out.
Wait. Sorry, sir. Sir, I'm sorry. I'm sorry, sir.
Let's try.
Five stacks of memo. I think it's trying to do that. You lost one of them. Like, see what moves. He dropped it.
Okay, guys, done writing? Yeah, do you get the difference?
Wait, can you? Now, what? I don't know.
Where is it?
It's possible.
Oh,
Double for you.
you don't get it?
Yeah.
All right. So what are the main differences, guys? The accrued expenses are basically what?
Expenses that have been paid.
Yeah, they have been incurred by the end of the balance sheet. What is balance date? No, what's the balance date? Last day of the period. So accrued expenses have been incurred, but payment hasn't been made, but accounts payable, of course, it's for the purchase of inventory on credit, right? And then accrued expenses, of course, they are based on expenses, and accounts payable are based on inventory, purchase on credit. And then how are they verified? Accounts payable are verified by the invoices, whereas accrued expenses are verified by the memos, right? And finally, accrued expenses may not be due for the repayment at the end of the balance date. What does that mean? Right? What does that mean? They are due, they are not due for repayment. Why?
They don't need to be paid.
Yeah, they don't have to be paid. Why? Because probably we haven't received the invoice, right? Or I mean, at the end of the balance day, we might not have received an invoice, right? So then we are basically calculating it, or we are finding it based on probably memo or previous experience, right? Previous data, previous information. And then accounts payable, they are due for repayment, but still there can be more credit term available, right? Yeah. Yeah. Okay. Okay, guys.
Wait. So there can be more credit terms after
Yes.
the balance,
Yes.
and then we can pay it.
Yeah, because let's say just before the balance day, they purchase inventory on credit.
Yeah.
But there is more credit time available.
Yeah.
So that there is no hurry for the repayment, right? So that is what is meant by more credit terms available.
Yeah.
Right. So still they have time, because why? Still there is some time available to settle the invoice. Right. Okay, guys. Right. So okay, we have to do the pre-adjustment and post-adjustment trial balance as well. Right. What is the pre-adjustment trial balance? Yeah, pre-adjustment trial balance. What adjustments are we talking about here? What adjustments? Yeah, what adjustments?
Closing revenue expenses.
Yeah, what do you call them? No, not closing the revenues and expenses. No.
Balance status.
Balance sheet. What are the balance sheet adjustments? Yes, inventory,
Losses and gains.
losses, gains. Basically, the changes or alterations made to the revenues and expenses accounts are the balance adjustments. Then
Wait, closing the stuff you make it after the adjustment, right?
after the pre-adjustment, closing the revenues and expenses.
Yeah.
Yes, after pre-adjustment, yes. That's good. Right? So, first of all, pre-adjustment trial balance is what is it? Before we carry out the balance day adjustment, before we make changes to our revenues and expenses. Probably the accrued expenses, prepaid expenses, we haven't adjusted for them, right? By the pre-adjustment trial balance. But post-adjustment trial balance, what is it? Post-adjustment?
After the
Yes, so the trial balance we prepare, having done the adjustments, right? Having done the adjustments, we prepare the trial balance, then that is what we call as post-adjustment. Now, for the post-adjustment trial balance, leave it on. Right? For the post-adjustment trial balance, what's the story? Have we done the transferring entries?
Yeah.
Yes. Have you done the transferring entries for the post-adjustment trial balance?
Yeah.
For the post-adjustment? No. So we will do the transferring afterwards, after the post-adjustment, right? So, does that make sense? Because if you prepare a trial balance after the transferring entries, then would you have any revenues and expenses?
Plus, you won't have a separate.
You won't have revenues and expenses accounts. Make sense?
Yeah.
So if you have transferred all your revenues and expenses to the profit and loss summary, and then you prepare a trial balance, then you don't have revenues and expenses, do you? You will have only profit and loss summary.
You can't make the income statement.
Yes, I mean, you can, I mean, if you want, we can prepare a trial balance after the transferring entries, but usually we don't. But even if you prepare, it doesn't mean that you can't do it, you can. You can do the income statement. But you don't have the detailed information, right? Make sense? Make sense or doesn't make sense? Okay. So this is the trial balance that lists general ledger accounts before. The balance adjustments have been made, and this one is after.
It's a bit. This is it. Those are visually flow following this kind of bit, see to see. Yeah.
Dom, if you can't see, come front. Otherwise, you have to move yourself. You can move over there.
They're walking with you,
Yeah. Otherwise, then you have to come front.
but they're walking with you. I'll just sit here. Still, I can still see it, but fastest.
Okay, guys. Any questions? Any questions? Okay, you want to try the ledger account? Prepaid rent.
Can you show me the full journal? That has some time.
Yeah, I will. Yeah, you can see this one if you want the. No. At this point, okay. The video is there. You can check there.
That would be what's on, sir.
Yeah, ledger account.
I'm low key. Excellent.
Ledger. Oh. Should I go come on and watch this?
Does that say EFT 10? Or with that one. You could.
It goes down, so like, what I haven't done.
Yeah, this is what we did last week. Try the part E. Did I have you last time in the class? Very well. Or it's for the week's income.
No, you gave it to me.
Yeah, you had left.
Oh.
Wait.
Yeah.
I had left it. Sure.
Yeah. Already J. Yes.
Thank you.
How many people would you? 14 about that? Like 3 months, not other weekly, just something. What's the little which? No waste in June. Oh, wait, do you have them?
You are going to leave it again?
It's going to be June. Yeah, I think that would be. This is not going to next week. That's all guys are. What? So they can't, that they're not ignorant, that's to be like, what? Yeah, English. Going down. A number of them. Preparation. Working the office. Sorry.
Okay, guys, are you done? Done? Finish?
I have some full access for.
Oh yeah, I'll give you. Can I ask, let me check the your average.
The 1200.
Oh, GST.
I'm safety.
No.
Yeah, like if I wait,
No.
I'm sure that's what
How often do they prepare the reports? Every? Also?
Yeah.
Well, you guys done?
1.5 versus damage.
Done? No?
Started the last week.
Sorry?
I started the last.
Are you sure you did the legend?
Yeah, I did like them.
Yeah, you need one. How often do they prepare? versus.
I have. Yeah.
Oh,
That's the thing. I think it's give me on. I think, oh yeah, spend this in January, okay.
Yeah. Shall we do it, guys? Still nobody has done it correctly. Right. Now have a look. How often do they prepare the reports? Yearly? Yeah. How often do they prepare it? Quarterly, right? Quarterly. Okay. So yeah, 3 times. Why? Because you are going to come across the you are going to come across the balancing or closing the ledger account 3 times. Yes, right. Now, 1st of May. Yes. What happens? Bank 7,200, and then they are then preparing the reports at the end of June. So then, what's the entry, guys? 20,400. Yes. June 30th. Go into the rent expense. And this is a matter of balancing.
Wait, will we ever be asked this kind of question? Is that multiple?
Yes. You can be asked. That's why I gave you this question. Yes. Then when do we prepare the balancing entry? September 30th. Yes. 4,800. 4,800. So how many months would be there? Yep. 3 months. Yes. 3,600. Yeah. What are the months? July, August, and September. September 30th. Rent expense. Right. And then the balance 1,200. Then opening balance for October 1st is 1,200, 1 month rent. Then what happens? Yep. Then what do we do for this 1,200? Well, what do we do for this 1,200? And when? When? Yeah. When do we do this one? December 31st. Yes. What is the entry? Yeah. What's the entry?
Expensive.
Yep. How much? 1,200. Yes. Then our online missing. Yes. 1,200. Right. Then what happens again? January 1st. Yep. What is it? Bank. How much though?
What are you looking at me?
How much though? How many months?
3,
Three? 3 months?
4.
Oh, she's.
Sorry?
4
4 months? 4 months? Yes, any other month? 6? 3? 3 months? Yeah. Actually, yeah, 4 months is correct. Why?
2 months already.
2 months already have been what? See? Accrued, yes. We accrued for 2 months. Huh? We accrued it for 2 months. Then only 4 months, guys. Right? Yeah, that's it. They're asking only for January 1st. That's it. Yeah. 4 months. Any questions? Any questions? Yeah.
Why? You know the total on the black total from the second one?
Yeah.
Why is that 48?
This one?
Yeah.
Yeah, it's 1400. Why? Because the closing balance from June 30th is 4800. Why? Because 4 months have been prepaid. Why? Because the first payment went on. When? When was the first payment made? May 1st, yes.
Yeah.
So then May, June. So 2 months have been incurred.
Yeah.
Then there are 4 months left. 4 times 2.5.
So in 3 months of it, the 3600, you take the.
Yeah, because they are going in every 3 months.
Yeah.
Right? So see, rent cycle these guys how often? Rent cycle? No.
Where's 6 months?
6 months, yes. Rent cycle is 6 months.
Oh, yeah.
Whereas period cycle, reporting period cycle is inverse quarter. So always you have to expect something like that. Why? Because to confuse you, always examiner is giving you basically mismatching cycles. Right? So as I told you, if you can deal with this one, yeah, you can deal with any prepaid and accrued. All right, guys. Then we are done with the first lesson. Oh, the unit 4, prepaid and accrued. Right? And we are starting. What is it? Depreciation. Depreciation.
You can use also like what and that. Yeah. Every 5 months we have to separate. So yeah.
Okay, guys, depreciation. Right. So depreciation, we have actually 2 tubes, right? One is on this one. The straight line depreciation. Then we are doing reducing balance method, and after that we are doing another one for disposal. So there will be 3. I'll if possible, I'll combine reducing and disposal. Okay. Okay, guys. So depreciation. Yeah. What is depreciation? Make sure, guys, you do you learn depreciation well. Right, why? Because as I said, you have 2 types of depreciation, and also you have disposal. Disposal means we are selling or getting rid of our non-current assets, right? If you don't learn depreciation well, what will happen to you? You get depression. Okay, so I don't want you to end up anybody with depression. Yeah, make sure you learn it. Yes.
Well,
Right.
last time I came to you, I was in a heap of depression.
Really?
Well, for you, no scenario.
And when you learn depreciation, you'll be done. Yeah, don't worry.
But
You'll be done with depression. Yeah.
I'm very happy because I found the thing I lost. I think I told you.
Yeah. That's good. All right, guys. Yeah, we'll do first the theory. Yeah, allocation of the cost of a non-current asset over its useful life Right. Depreciation expense is that part of the cost.
Wait, so not for the first definition.
Yeah.
Is it the allocation of the cost of non-current asset?
Yeah.
Oh yeah.
Yes, I'm sorry. I'm missing that one. Is the allocation of the, thank you, of the cost of a non-current asset. Yeah, is that part of the cost of the non-current asset? That has been incurred. In the current reporting period. Okay, guys, what's the double entry for depreciation? So, debit depreciation, why do you debit it?
Because it's expense.
Expense increases. Depreciation of machinery. And where do you credit?
Oh wait.
No.
Hold on. Non-current asset.
No.
Accumulated
Yeah, accumulated depreciation.
last year.
Accumulated depreciation of machinery.
Because the cost of building is small money.
Okay, what is accumulated depreciation, guys? You don't have to ask me, you can go. What is the accumulated depreciation? Non-current asset? No. What kind of element is it? Negative asset, negative non-current asset, right? So negative asset, right? So negative asset increases, so we credit it. So this is quite similar to what? We came across another negative asset. Allowance for doubtful. Yes, not bad debts, allowance for doubtful debt. Yes. Similar to that, but the functionality is different, right? So accumulated depreciation, guys, see accumulated. We have done this one too, right? But we didn't do the ledger account. That's the only difference. We didn't do double entry or ledger account, but we have done the concept. Accumulated depreciation, what happens? So every time
Every time
we depreciate, what happens to the accumulated depreciation? Increases. But remember the allowance for doubtful debt? What happened to that? Did it also accumulate? Did we accumulate it? No, we didn't have an accumulation, right? So we'll see the difference when we do the ledger accounts, right? Allowance for doubtful debt, we didn't accumulate. Okay, guys, formula for calculating the annual depreciation expense. Yes, anybody remembers? No, how do we get the depreciation percentage? Yep, historical cost. Yes, take away something, yes?
Residue.
Residual.
Divided by useful life.
Useful life in years, okay? Okay, shall we put this on into an example? Yeah, let's say you purchase a computer, right? So how much would be a computer? 2,000, right? And then residual value. What is the residual value, guys? Liquidate the asset at the end of its useful life. So the value of the asset at the end of its useful life, right? So let's
Useful life doesn't generate any revenue. Is that the estimate?
it will generate revenue, but based on its let's say
Useful life just from the business price to get rid of the asset.
no, useful life is basically what they determine how long they can use it for at the purchase, right? And it can depend with the businesses or the user's experience, right? So let's say how long can we use laptop for? I mean computer. 4 years, right? Then how much do you think you can sell it after 4 years? 500, right? So then what do we do? So you take away 500. So why do we take away 500, guys? So you purchase it for 2,000? Evenly, right? So why do we take away 500? So we purchase it for 2,000, but we take away 500. Why? Because we are not going to consume, or we are not going to basically incur this particular expense, 500. 500, we can't depreciate, we can't consume it, we can't use it, right? So probably the next user is going to use it. So then 2,000, take away 500, so that means the total amount that we are going to use it for, or the total amount that we are going to consume during this 4 years time is, or how much? 1,500. So 1,500 is the total that we are going to consume. We give another term for that. What is it? Total depreciable value, right? So the depreciable value is the 1500. 1500 is used to consume over 4 years time. So then 1500 divided by 4, which is 375. Yes.
Wait, why wouldn't like any business just like use their non-current asset until like its value becomes like zero?
Its value can become zero, or sometimes it may not be zero. Why? Because still there is a scrap value. We call scrap value. You know, even if it is a vehicle you are using to the dot,
Yeah.
and then still you can sell it for something. Yes,
Yeah.
to the records. Yes, yeah. So like that, there is some part in any asset, in a non-current asset, that we can sell for. Right? We call the scrap value, residual value, disposable value. Right? What else? There is another term. I can't remember. Right? Residual is what we use in our slide design. Scrap, disposable, right? Like that. There are different terms. Okay.
So if I purchase like a van today, so I'm gonna predict its useful life,
Hmm.
and then I start depreciating it like monthly and like that.
You will depreciate it based on your length of the accounting period. Based on the length of your reporting period, you will depreciate. Otherwise, depreciation occurs every day. Yeah. Every day it occurs, but we are not going to do it daily because we are not like jobless, you know, we keep on depreciating every day. Right?
I'm jobless, I don't have a job.
Okay. So,
2 years working.
yeah, so then we can do it according to the length of the period. That's it. Right? So, which is our balance date. So, this is also depreciation is also what? Balance date as well. Isn't it?
Right, so if our reporting period is monthly,
Hmm.
then how do we record?
Yeah, then we calculate annually. So, which we are calculating now.
Yeah.
Then you can divide by 2. Proportionately, you can calculate for anything. Yeah, makes sense. Right. So then this one is, guys, how much is our annual depreciation here? 375. Yes. Then next one, how do we get the rate of depreciation?
Annual depreciation expense
Yep.
divided by
No.
is it total?
Yeah, annual depreciation divided by
About
Hmm?
total depreciation value.
No.
So
Sorry. So
so
yes. Annual depreciation expense divided by the historical cost times by 100.
wouldn't it make more sense for total depreciation value? Well,
No, because why? We don't take the total depreciable value. No, we don't take the total depreciable value. We take the historical cost, right? Because every time when we are going to calculate, you can do it in that way also. Then if you are going to do that, when you are going to times it. So let's say you got the depreciation rate based on the total depreciable value. Then when you are going to calculate the proportionate depreciation expense, also then you have to times it by depreciation rate, you have to times by the depreciable value as well, rather than historical cost. But how we take it is like, ATO, everybody, right, is calculating based on the historical cost. We don't actually know. I have never seen that one that we compare it with the total depreciable value. Okay, guys. Right, then what do we do? If you want, yeah, we can calculate it. So this one is we are getting depreciation rate is equal percentage, yeah, per annum. So this one we are getting a percentage per annum. Right? Right, next one. Calculating depreciation expense using the rate. Yep. Annual depreciation. Expense is equal to historical cost times by the annual, sorry, not annual, depreciation rate.
Wait, can they give you a question like an exam where like you're given two like you're given like a scenario,
Yep.
then you're given straight line depreciation, reducing math depreciation, and you go to like this was
Yes. Yes. There is a question here. And also they are giving modeling. You know modeling?
Oh yeah.
Yeah.
There's like one on wages.
Not what the girls do. Right? Modeling. No, not that one. The modeling, financial modeling. Okay. What is it? So we are going to do it. We are going to anticipate for different years. Right?
Wait, so you know for the rate of depreciation. So you know how we discussed that the recording increase monthly.
Yep.
So would we divide the depreciation expense like first by 12 and then we do
Annual depreciation expense. Or what?
12?
You mean, and you divide annual depreciation expense or the rate you're asking?
Yeah, it's like if we're doing the monthly.
Yes.
What would we like change?
Yeah, we will change. We firstly will calculate annually, then you divide by 12.
Putting that forward.
Oh, no. Now you can calculate, okay. First of all, the basis is like firstly we calculate the annual depreciation expense using our this formula,
Yeah.
right? That is the base.
Yeah.
Once we have found out that annual depreciation, then we can derive it for what? Depreciation rate. And also again, in reverse, you can use the depreciation rate also to calculate the annual depreciation expense. Either way, you are going to get the same answer. In the exam, you will be examined for both. So what is it? Firstly, you will be asked to calculate the annual depreciation expense, right? Using that formula, right? Secondary, you will be given the depreciation rate, and then you'll have to calculate the depreciation expense.
Okay.
True. So, like either way, we are getting the same. Make sense? Yeah.
There was a question that if the reporting period was monthly, you calculate the depreciation rate.
Yeah.
Would it still be the same for annually and monthly?
No. Depreciation rate is always annual. We don't calculate a monthly depreciation rate. Okay, from the depreciation rate, you can calculate the expense for any period, for any length of period. Yeah, well, you can calculate because as long as we have the depreciation rate annually, can't you calculate the depreciation expense for any length of period?
You calculate via like the depreciation rate, you calculate the annual depreciation expense.
Yeah.
And then you can calculate the expenses for like monthly.
Yeah, monthly, quarterly,
Never give you monthly or weekly break.
always annual, per annum.
But why is that?
That's basically a norm. That's the practice. Usually, now see, for example, interest rate. Do they give you like monthly interest rate or quarterly interest rate or what? Yeah, but annual, always annual, yeah.
Wait, if it's like compound on.
Yeah. So still the rate is annual. Rate is expressed annually. You can calculate it anyway. If you want to calculate per day or per month, per week, anything you can calculate. Okay, guys, then how do we get the annual depreciation expense? Okay, how if you want to calculate a rate, what do you do? Yep. 375 according to our example. What is it? 375? Yes. Divide by how much? 2000 times by 100, which is 18.75. If it is a rate.
Pan.
Per annum, yep, always.
Just state per annum, or is that just implied that it's always per hour?
Yeah, always per annum. You don't have to write it. I mean, for counting, you don't have to write it. I don't know about other, I mean, subjects. Yeah. 18.7. General maths also, you don't have to mention that. But I don't know about methods and specials. Okay, right. Then guys, any questions? All right. Write the note for the residual value.
I don't have to read.
Yeah, you can read it.
Read 4 off, so fine. Next fine, so. That's, again. The German account. That content.
Yeah, I'm sure you can. But first, can do on this stuff. Oh, shouldn't be about that when we started.
Why, it's fine, that's what you so.
I feel like express.
Okay, guys, what is carrying value? What is carrying value?
Historical cost less. No, usually.
Yes, historical cost. If you need the formula, that is historical cost. Take away. What is it? Accumulated depreciation. Yes. Yep. Okay. So what is the definition for that one? The value of a non-current asset that is yet to be consumed / used as an expense plus any residual value. So that is what the carrying value is. The amount of the non-current asset that is yet to be incurred or consumed as an expense plus any residual value. Okay.
So it's like the value recorded in the books. That's like a current value, yes.
Mm.
But it's not market value. It's like in the books. It's not.
Yeah, in the book, yes. That is how much is yet to be consumed plus any residual value. Right. Then guys, use of the first we write the note, then we'll discuss use of estimates to calculate depreciation.
And you also have a note on the non-depreciable assets. For instance.
I haven't really given it because I mean we are going to do it in the questions, but I'm not going to give you a note. Do you need a note?
I mean, if it's gonna be like cost. If it's gonna
No. That's never come.
be, you know, last year.
Eh?
No, like, I think we discussed it.
Yeah. In the book, in the class we discuss, yeah. We are going to discuss, but I won't give you a note unless you need it. Sorry, yes, residual value and yeah. Useful life. Faithful representation and verifiably state that estimates.
I'm just two guys speaking science. It's English, so six. English, English, yeah. Yes, not that's it's just true. Yeah, that seems to be. That seems to be. What's space?
Okay, guys, this one, we have again discussed this part in two as well. And this is, remember, ABC question. Okay, discussing the use of estimates to calculate depreciation, right? Now, do we really use estimates for calculating depreciation? What are the estimates we use? How many?
Two.
Two, yes. What are those?
Residual work.
Residual and useful life. Very good. So, however, we use three elements to calculate the depreciation. On top of those things, we use the historical cost, which is the only verifiable information. Yes, all the others are estimates. Then, ethically, are we allowed to use the estimates to calculate the depreciation? No, are we allowed to use the estimates
Yeah.
for the depreciation? Yes. Why is that? Without? But doesn't it? But aren't we kind of breaching the verifiability and the faithful? That says we can't use estimates. Yes.
Wait, I have a question.
Yeah.
The same historical cost in 2000. And like I just like estimate my residual value is like 1800,
Yeah.
which is inaccurate. So and then
Yeah.
then I can just depreciate it and then
Yeah.
my profit will be higher.
Yeah. Profit will be high. Correct. Yeah. Correct.
But
However, if for business purposes, right? ATO is basically using parameters. They have their own valuation. So that means, like, for the ATO, it will be better. Why? Because then we will end up in paying more tax, right? So you are exaggerating your profit, means what will happen? You'll pay more tax.
what if I do the opposite?
Opposite, yes. For the opposite, still you have, there are, as I told you, there are parameters, they have their own valuation. So let's say we calculate the profit whatsoever. Let's say we will basically dump some in depreciation and we do some very undervalued profit. Then still ATO will recalculate your profit. Okay, so they have their calculation method, then they will give you, they basically provide depreciation rates for specific assets. They have different depreciation rates. So then basically we can't leave it. No. What did I say? Leave it.
Sorry, sir.
Yeah, you see.
Also, wait, so the ATO brought some preset tuition rates.
Yes.
You get to choose which one. you want.
Yes. Yeah, basically they have about three methods. They have three methods. No, based on let's say for example, I can depreciate my computer based on the number of hours I use, or maybe reducing balance method or straight line. So basically they provide us the recommendation. So like that, let's say how I depreciate my vehicle in, I have few methods. Like they have given based on the number of kilometers given, or else reducing balance.
Another thing.
So like that, they have given few options, so we can use it. But we can't by basically switch in between, right? So it is then it becomes a problem. So yeah, then because then you have to start calculating from the beginning, which is annoying.
Yeah.
Can I close the?
Because it's cold down, it's a cold, but that's cold. If you drive a certain.
Only it's otherwise it's not fun.
You like the cold?
Okay. All right, guys. Right now, are we allowed to use the estimates? But aren't we breaching the verifiability and faithful representation?
Yes.
We are breaching, right? So basically, why? Because verifiability and faithful both say that we can't use estimates. But the other problem is, right? So sit properly, fall into sleep, right? Other problem is if you don't use it, can we calculate depreciation? No. Again, without those two, we can't calculate. So then, guys, what is the story? So then, the point is this, right? The debate is this: are we going to use the estimates, or we are not going to use the estimates, and we are not going to calculate the depreciation at all, which is more accurate, right? So leaving out the depreciation completely, is it more accurate than calculating the depreciation based on the estimates? Which one is more accurate?
Yes, we'll calculate.
Calculate depreciation, yes. So then we have to definitely leave out the other option. We have to anyway breach the verifiability. However, there is another part in faithful that says you have to report the what event, real world economic event. So to do that, anyway, we have to use the depreciation. I'm sorry, use the estimates. And on the other hand, guys, I have written, relevance is more predominant than verifiability. So anyway, we have to, regardless, right? We have to basically listen to the law. Like you have to listen to Trump.
I'm not going to listen to Trump. He's the reason why I don't like American entertainment anymore. I hate his tariffs.
Yeah.
And there was this. there was this business
That's the thing.
management teacher.
Yeah, that's the thing I'm saying. Even though we hate it or not, still we have to follow it. Yes.
Oh, right.
Yeah.
There was this business management teacher at my school, and
Yeah, now-
he would talk about Trump's tariffs
Now,
and
see,
business spots.
now because of his vote, now see, we are going to pay. Yeah, we are going to pay more for the petrol. Yes, the whole world, not only us. Yes, everybody has to. Yeah, now see, yeah, increase in fuel basically increases the cost of all the materials, everything. Yes, for food and everything, right? Not only for the car, right? It is costing everything. So then, so like that, relevance is yes. What is it? Demanding that we must do depreciation. Okay, all right, guys.
So fair value is also an estimate.
Fair value is also an estimate. Right, cost of non-current asset, guys. Right. What is cost of the non-current asset? This one we haven't done. In 2 years.
Right.
Cost of non-current asset. That includes
Isn't that modification?
yes modification. All the cost
Okay.
incurred for the non-current assets to bring them into a condition and location ready for No, not sale. Sorry? Use. Yes. For sale is for inventory. Yes. Same definition though, but there is only one term difference. Yes. So basically, don't write when it is for the non-current asset. Don't write sale. It is for use. Okay. So I'll write it. So what are the examples, guys, for the cost of the non-current asset? Yeah, purchase price. What is the double entry for the cost of the non-current assets, guys?
Using a loan.
No, cost of the non-current asset. What's the double entry? Anything you include in the cost of the non-current asset or historical cost of the non-current asset. So what do we do?
Cost of
Yeah. So then
debit.
debit the particular non-current asset and you credit the bank. Yes. Right. So then this case, double entry for purchase of non-current asset using a loan. So firstly, you are receiving the loan. Yes. What's the double entry for receiving the loan?
Bank.
Debit bank and credit the bank loan. Right? Do you need the let's say if you want we'll put amount 15,000.
Still bank loan. I can't do a letter account.
Fine.
It should be known.
Yeah, okay. So then loan, what is it? Whatever the
Wait, doesn't purchase of a non-current asset is shouldn't it be debit and also?
Yeah.
sorry?
Should it be debit instead of non-current asset and then pay the loan for this one?
Yes. Yeah, so firstly, double entry for purchase not using a loan. Firstly, you are receiving the loan. This one is, guys, for the hold on. This is receiving the loan, okay? If you are going to confuse, please write receiving the loan. Okay, you receive the loan. So it's not bank loan, loan bank.
Like,
What?
like loan name of bank. Oh. The name of the loan. Wait, the name of the bank on the loan that's given to the bank.
Yeah, yeah. Whichever.
Wait, it says double entry for purchase of no credit.
Yeah, purchase of non-contract using a loan. Then firstly you are receiving the loan.
But wouldn't you debit and credit? Wouldn't you simultaneously?
No, separately.
See, right?
Separately. Okay. Right. Then what's the double entry for the purchase of the, let's say in this case, guys, van? What happens? You debit the, yes, debit van. How much? 10,000, you sure? No. 7,000? No. Sorry? No. 12,000, yes. Right? You debit the van 12,000, yes? And then you debit the, yeah. Again, you debit, yeah, prepaid. Rejo. Yep. Then you debit where? How much? Oh, sorry, 1,000, yes. So GST clearing 1,300. And you credit the back. How much? Okay, guys. Now, what are the cost of the non-current asset that we record in the non-current asset account? Yeah, what are those? Any cost that has been incurred that would provide future economic benefits. That's important. So then you can ask me, what about the registration? Yeah, doesn't it provide future economic benefits? No. They provide they provide economic benefits only in this current period. They basically consume the economic benefit. That's the difference between, what did we discuss? The difference between an asset and expense. Remember, I gave you a question in our practice F also, right? That's the difference between asset and there are some other differences, but mainly. Then, guys, what are the other expenses that we are going to add to the cost of the non-current asset or historical cost? Yeah. So these are things: modification, delivery. Right? Let's say we purchase a van from Japan, so we paid for freighting, right? For insurance, expense shipment, everything, right? Modification, installation, if it is a machine, right? So those things we are going to add. Now see the example I gave you, shelf, right? Then we are going to add. So let's say we are going to repaint the van with our logo, business logo. What do we do? Do we add it or it's an expense?
It's an expense.
Expense.
Future economic.
It does provide economic benefit over time.
Sorry,
Does not provide benefit like
it provides or it doesn't provide?
it does because shelving is something you can use. So,
Yeah,
so it helps you sell the product.
yeah. The logo, we are repainting the van with our business logo.
Yeah.
Sorry?
That's all.
Yeah, kind of advertising. Yeah. So my question is, are we going to add it to the cost or is it an expense?
Cost.
Huh?
Wait,
Yeah. Huh?
As it to cost.
Yeah, historical cost. Yeah, not an expense. Right?
is that?
Why? Because it gives us what? Advertising. Right?
So
Then let's say you are basically you, yes.
What's the difference between modification and installation?
Yeah, modification is anything, like you can I don't know, like maybe you are adding a bumper, I don't know, like basically you put an alloy wheel right? But it is modification. You guys know better than me, yes? Yeah. So those things. Some people put, LED lights inside the vehicle.
Do people really do that?
Yeah. So any modification, I don't know.
Why is it not installation?
Sorry?
Why can't that be an installation?
No, because installation is not that. That's not the definition for it. So installation is we are installing maybe a machine, like basically machine in the sense they are big. You need the foundation, you need the concrete sometimes.
So modification is like more decoration.
Yes. Right? Let's say you put something like this. Let's say you purchase a second-hand van, right? And then you install a new engine. Yeah, what do you do? Is it a cost?
Yeah.
Yeah?
Yeah.
Cost,
Feature.
cost or an expense.
Oh,
That's
wait, what's the question? Maintenance.
Huh?
What's the question?
question is you buy a second-hand van and you install a new engine.
Yeah.
Cost of this? Yeah, non-current asset. Let's say you install a new stereo setup. What is it? Cost. Then let's say you
When you do that, you would debit
yes.
engine.
No.
No.
You debit the van.
Debit the van.
Yeah, remember I told you, that's what I said. Any cost of the non-current asset, you debit the van. Okay? See, now we didn't debit the shelf. Did you debit the shelf? No. Everything? We'll have like 1,000 plus get on this. Yeah. Then let's say you bought a new second-hand van, you get a new set of tires. What do you do? Cost, historical cost. Yeah? Yeah. Everyone agrees?
Yeah.
All of you are?
But could they get up and finish like the shelf go to something and like they go new shelf?
Yeah. Okay.
Would we do that?
Yeah, let me add it.
Wait, tires.
Yeah, tires, yeah. All of you are wrong.
Engine tires.
Yeah. Tires, why? What did I say?
It's not one of them.
Any recurring nature, if it is occurring again and again, do you add it to the cost? No. Don't add everything to the van. My
Wait,
God.
the tires not.
Huh?
So what about like stuff like oil change and stuff? You wouldn't have that, right?
Maintenance, no. Why? Because every day you are doing, because regardless you have to do it. Right? Then let's say you, okay, registration. What do you do? Registration. Huh? Sorry? Expense, yes. It's an extra. Why? Every day you have to do. What else? Let's say you are adding a new part, right? To the engine that increase your fuel efficiency. Cost, yes, copy. Let's say you, as I said, you go to a second-hand van and you go to the driving seat, trying to drive, and steering wheel is missing. Right? Steering wheel is missing. Now what do you do? You have to buy a steering wheel. What do you do with the cost of the steering wheel? Cost. Why?
Because you're not gonna buy those steering wheel, hopefully.
So you are not going to.
We hopefully won't need buy a steering wheel.
I
Like,
did-
you're only buying a steering wheel once.
Yeah,
Again.
yes, because why? Without that, you can't drive. Yeah, you have to drive. I mean, you have to add to the
Credit the steering wheel.
cost.
No, you credit the asset.
Van,
Yeah, we debit.
you credit the van and debit the van.
Oh,
So you debit the van means what do you do? You are going to, yeah, what do you going to do afterwards?
add it back.
No, you have already did it. What do you do? You depreciate.
Oh.
So you have added means from the cost. You are going to depreciate subsequently.
Subsequent depreciation.
But it's it. So the cost of the non-current asset is the historically cost again.
So what time is it, sir?
6.
So when is it break time?
Yeah, so. Yeah, any other?
And what if you buy the phone?
Yeah.
And then like the what's it called? The lifetime of it's like 4 years, but like halfway through you add more like installations or modifications
Yeah.
that increases the value of the phone.
Yeah, what do you think? Yeah, you're going to add to the cost. Debit the bank, credit the bank.
Wait, when the depreciation will change.
Yeah.
It will change.
So would the useful life also change? Also like useful life?
Useful life may change, yes.
So then
It
we
will may
have to
change. Yeah, we have questions like that.
wouldn't have to recalculate the period.
Yes, yes.
But then what about the period that it's already been?
Yeah, that's already done. Don't worry about it. Let bygone be bygone, yes.
So I don't know. So in fact, they're just like a laptop from like another country, and I'll have like delivery costs. Yeah, like
Sorry, what cost?
there'll be delivery
Yes,
costs.
yes.
I'll just like a shipping,
Yeah.
and then I'll
Freighting, yeah.
freighting, and then like so it'll be like the cost of the laptop plus the freighting.
Yeah.
Is like the value of the laptop I'll report in the balance sheet.
Yeah. Along with the freighting, that's what I said. All of these are, see, all of these are coming as a part of the cost, meaning you're going to depreciate. Like, see, shall we? You're going to depreciate.
Wouldn't that overestimate the value of the laptop?
That's the definition.
Like,
That's the practice.
fair value.
That's the standard. Remember I told you? Oh no, you're not there. So who is setting the standards for accounting in Australia? AASB, Australian Accounting Standards Board, right?
Who's
So-
the chairman of the board?
Yeah, so they are going to, they decide like how the accounting treatment should be.
Yeah.
You and I can't do it, right? We can do it, but nobody accept it, right? So
Who's the chairman of the board?
doesn't matter.
Hmm?
Right?
So I'll be
Yeah.
Sure.
So does that answer your question?
yeah.
Okay, guys, yeah, we'll take a break, yes? For 5 minutes.
Finished, so.
Yeah, start question 2. Question 2.
You get back to the here. Appreciate it.
These guys saying about what you get, but these guys are what else. They have no point.
He said he got same months. Wrong.
You ought to be good. Oh, you don't use, yeah. No,
No, what's that?
well, that's what you're talking about.
Yeah, somewhere in
It's all like the high eighties, mid eighties. I know.
What's the definition for carrying value?
Yeah, I gave you. What's the carrying value?
The value of the non-current asset at the time of the reporting period, reporting report was prepared.
Sorry, value of the?
Non-current asset at the time the reporting the at the
No.
the value of the non-current asset at the time the report was prepared.
No.
Because I mean it has to be sourced.
Sorry?
As it's because
Yes, that is yet to be consumed plus one more thing. The value of the non-current asset that is yet to be consumed in yes, in the rest of its useful life plus what? Sorry? Residual value.
I think it's something like the government. I mean, I know what I think.
And when are we gonna go through this one?
Yeah, first you want to try.
No.
No.
What's with that stuff? Is that you?
Wait, for reporting depreciation, you would credit the assets as.
Is that what I showed you? Go through the double entry.
Yeah, great. This is good. Every time when you want 1.3 records, it's at the very end, 3,000. It's a 3,000. The relations, that's right. This is bounty.
Done, Krishna?
balance it, yeah.
Wait, no. So expense. That's what I'm saying. You transfer. Remember? No. No. That's. Yeah. Can't find it. Yeah, there's no.
Sir,
There's nothing. Oh, wait, no. It just said. Most of
under the tube. Okay. Under the tube, insert.
Wait, do you have to transfer things? Cause it just says like, supposed to general entries.
I didn't get to.
It just says supposed to general entries,
Yes.
so we need to like transfer,
Yes, to the ledger account.
you need to transfer the profit and loss on.
No, not that. To the relevant account, hold on. This one is asking depreciation for which years? Yeah, you need to transfer it to the P&L somewhere. Yeah, hereafter. So as long as you have done with that, you have to transfer all of them to the payment side. However, in the exam, you will be asked, to do the transferring increase or closing increase. So then either do it or not.
Sir. Excuse me. Sir, can you hear me? Hello.
Actually, the rules for this policy.
So can I run this by the last?
Done, guys? Shall we start?
Yeah. Something every single. Yeah. Ah, ah, ah. We stop. Why? Yeah. You might have always been.
Fine, don't you get started? That's, I'm sorry. Yes, thanks.
That's good. So do talking about the unit. What do you do? No, I have to do. I don't do that. Fuck it. Not only but. Fuck it, it's going for nice. That's all. Give it in, no? Did you get that? Let's get this. We get that. Make changes. See, that's small. 511? Because it's 127. Wait, what?
John, I
I think it's 125. Yeah. But you know the question said 125. So it's 127. I don't have 3,000. I mean. Yeah, question said. It's 2024. Do whatever you want. But it's not, good luck with that one. Sorry. No, I didn't start, so just keep it in. Yeah, what that for the exam? After that, we're going to do 25 speaking. No. Yeah. Like, oh, wait, it's a change. Some sense, other things that is from all of this. Yes. The same thoughts. This concept.
Okay, guys. Now what is number one? What is number one here? Historical cost. Number two, accumulated. Three, carrying value. Number one, two, and three. Right. Then what's the double entry for part B? Record the depreciation for the year ended 30th June 25. Right. So when has it been given? 30th June 24. So when this give us 30th June 24, my question is, have they done the depreciation for the 30th June 24?
Yes.
Yes or no?
Yeah, no.
Yes, no. No, yes, no. Okay, until 30th June 24, depreciation has been done.
Yeah, the balance sheet is done after,
Yes, so depreciation is done.
Yeah.
Okay. Right. Then next one, part B. Record the depreciation of office furniture for the year ended 30th June 25. So how do we know how much it is? Yeah. How do we know how much it is? Calculate the rate. Okay. How do we calculate? We haven't been given the residual value. Sorry? 2000 has been given. Then we haven't been given the useful life. Have we? 3000. Yes, it says 3000. You don't have to worry, calculate. It's already given. Yeah? We have to read the question. What's the double entry, guys? What's the date? June 30th, 25. Yep. Yes, what's the double entry?
Depreciation of office furniture.
Depreciation expense of office furniture. Yeah, how much? 3000. 3000. Where do you credit it, guys? Accumulated depreciation expense. Depreciation of office furniture.
would you write what's in the ledger?
Yeah, but we don't have space. You can abbreviate it, no problem. Because no space. In the journal, actually, yes, we should write, but again, no space, yes.
For this.
Okay, then next one. Narration. What's the narration, guys? Balance adjustment for what? Depreciation, otherwise, recording. Recording depreciation expense. Expense for office furniture. Yep. What's the memo?
No memo.
No memo. Yeah, no memo. So then don't worry about the memo.
But there was a memo you.
Yeah, then don't worry.
Question about memo X.
Yeah, memo, whatever, if they have given us memo, whatever it is. Right. Then what's the double entries, guys?
going to do that.
Yep, the double entries. Ledger account for part C. Right? Post the general journal. Relevant account, general ledger. So, right. What's the double entry, guys? Yes. What's the date? What's the date? June 30th. 3,000. Where is it coming from? Accumulated depreciation. Then yeah. Then we have to write the what is it, guys? July 1st.
Oh,
24. Yes. July 1st, 24. Depreciation. Yeah. How much is the balance, guys, here? As of July 1st?
So do you need the year, or can you just write that?
Sorry?
Do you need the year? Can you just write that?
Can you write, sorry?
I think, should be right, so you thought.
July 1st, 24. Yeah, we'll write because the next one we have write for 25, right? July 1st, 24 balance. How much? 9,000. Then June 30th, 25. Yep. Depreciation, expense of office furniture, 3,000. Then what do we do? Matter of balancing. And you transfer. What do you do? No, not transfer.
what?
No, not profit and loss summary.
What transfer?
No, not transfer, balance. July 1st, 25 years. Balance. Right, what do we transfer? Which ledger account do we transfer? Depreciation. Right. Then that's it, yes.
Negative.
Right. Did you do part D? What is it? 9 years? 9 years. You sure? So how do we do it, guys? Annual depreciation is equal historical cost, take away residual value, divided by life, yes. Then what is the annual depreciation? 3,000. Historical cost 29,000. Residual value 2,000. Then life.
Awesome.
So basically, the cost multiply, yes. So life is equal to 9 years.
Oh, wait, so you can do X.
Yeah, cost multiply.
What?
What did you do? Huh?
Mention.
Yeah. So then, but you can't say X is 9 years, okay? Life is 9 years. Don't say X is 9 years. That's wrong.
The view of X is opposed to the dependent.
Right, usually like a box, right? Okay, guys, then what's the balance sheet extract as at 30th June 25? Yep, office
Since 2027.
2027. I'm sorry, this is 27. Yeah, you're correct. This is type as 25. Should be 27, okay? 27, okay? Office furniture. How much is the historical cost? 29,000. Then
Let's accumulate.
plus accumulated depreciation.
So it's just a second.
How much?
18.
18,000. So, yep. So then after 3 years, yes. 25, 6, 7. After 3 years. So another 9,000, 18,000. Everyone is okay with this 18,000, guys? Yeah, this one is basically 3,000 times by, actually not like that. 9,000 plus 3,000 times by 3 years, 18,000. So then 11,000 is the carrying value.
Why is it times 3?
Because why? This one is after 3 years, because they are saying this balance sheet we have been given on 24th.
Oh.
Then 27, yes, 3 years. Yep.
What's the? This. That.
Okay.
Okay.
Done? Okay. Question 3.
So which one do you do for homework?
Homework, we'll see.
I know we want that to be. Oh, it's good. You can just have it. Yeah. Oh, it's such a hot image. Oh, I don't know. It's so bad for you.
This one? I can't remember. Yeah.
He sneezes and it's not a problem. Sir, he sneezes and it's not a problem.
Yeah, he's not I mean, like, huh?
Wrong.
Yeah.
I go, hot chicks. What's wrong with going hot chicks?
I think this source document I prepared, I just wanted to make it lorries, but didn't make sense, so say lorries trucks.
Basic.
Did you put Naismith Streets from because of Dr. James Naismith, the inventor of basketball? Was that named after him?
What is it?
Does dispose here mean residual?
Yeah, dispose means what, guys? You said. Sell. Dispose means sell. Dispose means actually you get rid of it, but in our study design, dispose means you sell it. Sell it, or there is another option called trading, which we are going to do later.
Wait, it says on April 1st, 26, Josh bought this to had a loan to 5,000 USD van, which it paid for. So who's paying for it?
Yeah, so firstly you are getting the loan.
Yeah.
Right? Via EFT. See, which it paid means you get the loan.
So you get
So
the
loan get paid,
Oh,
loan gets paid
Yeah.
via this EFT.
So the bank is paying to you.
Yes, I mean, whoever the lender is paying you money. Okay. Then after that you go and pay to the sorry, supply.
There's no bank name for this, right?
No.
Wait, what do you mean for bank, bank?
You can say bank loan.
Bank.
You can say bank loan.
Business rate, maybe.
I'm not sure.
I can okay, 25
Is there anything else you could see for like this?
Wait, how's you? Wait, how's this?
Oh, so it's an invoice.
So just like.
It's an amount. You know the cash there, but it's not an amount. Amount received, so.
What can I say?
You know cash. She is.
What you doing?
Is this important? Get the transfer from this. Yeah, just talk about it.
We have to go through the problem.
I can do steps. That'd be simple.
Yeah.
Yeah, it's.
Okay. Who's the load from? Who's the load from?
From the bank.
It's the bank just called bank.
Yeah, bank loan.
We just fill it out.
Yeah, that's what I GST is really good in the so that.
GST, sorry?
So that.
No.
That's the expense.
No, I think it's more like what the G provided to you with the initial code.
Oh, you beginning something. How was that, buddy?
No, I don't need those on the timing. On those two.
It's never.
That's one that.
Let's see.
Say here, for instance, those others.
Sure. Yeah, I need. Need help with like the other ones.
Different ones.
I need help from the first slide.
I think it's one. This is a profit and loss from that here.
Yeah, service contract is one.
Like, let's kind of, how do you, or do you just,
Lastly, is sometimes only one source located. So that means, okay, you have to, include this one, this transfer. Sense? But in big classified like what was.
Wait,
Yeah.
what's the? Well, you said this one. Combined.
No, I mean like, okay. Yeah, you are okay. Welcome. Almost. Wait, you think there's a sharp one? But it did the thing for my camera. This is wrong. The amount is wrong. How much is the? Oh, 22 bucks.
Sir. I got blood lip, I think I need.
Yeah, go.
Wait, the duration. Well, this, you just used, that I source. Not say expensive.
Yeah.
You see, expensive.
Yeah, extra. That's all. This is one for the race.
Which is we also.
Which can be bad. Well. But people.
Wait, is it not? It is.
Yeah. Yeah, that's it. Show me the double interest, please. What about this one?
This is just the, you see at the moment.
Yeah, receipt of that. Loan. And then, part D.
Oh, I know it's about.
Oh.
So, gosh, but. What the? What makes sense, bro? What makes sense? Jump.
No, that's wrong. Everything you are going to fit it. So it's for the awareness. So then what do you do? So you have to what to the right.
Yeah.
So then you won't have it separate. No.
Oh, so you need to everything.
Yeah, separate. And also you need the narration for this. That's only the space and then.
You don't say content. What about receipts of receipt? Expensive.
One more is when you work with you.
Since 20.
What about the, yeah, this one should have been recorded first. But.
Wait,
It's part A. Oh. This is part A, this is part B.
let's. What? We don't need.
Wait,
So you do E and F also? Honestly, isn't it? Or is it B? It sounds bad. Isn't it like we went up for lunch, right? We got home like 2 o'clock. We were sitting and minus assets and my cousin all through. And I woke up and it's 4:30 something. Please.
so we have the English class.
I should have went up. So,
Question, sir, I don't know. You said that you are going to, so you can write this.
oh, the order, you know, the
Yeah.
You know.
Yeah.
Yeah, I used to go there.
No, I know that sounds like a.
7,400. Oh, no, that's what I said. That's a woman. Nowadays. I'm going to like she's near family. There's 3 months. 3 months.
Yeah.
I can. But like he skipped,
April, May, June.
like he skipped from, difficulty depreciation.
Still don't get it.
Oh, I did finish it.
You sound like that, you know.
It's 3 months. How's you? Is a bit annual for you. That's annual. When it's with paper, you think about like how much you.
Sir?
You think about it.
Yeah, that's it. So.
Yes. Once you touch my face. Love it. No problem. I don't even know how it is.
I was so I
They June.
had it fixed.
No, David.
It's in 9:25.
So one of these expenses, but
Year ending.
So the is done.
Wait, why would it be? What would be depreciation?
So shelving you fit.
Let's do something.
But it's 1,500. No. What are you on? What are you on? It's just 3 months. That's not even. She want that. But you're education. No, but this is what I like. This is the teachers.
But you depreciate.
I put in the class last 3 months. April, May, June, oh, not 3 months. No. Right, yeah.
What is it?
Get your.
Yeah, it's so annoying. Yes.
What you get depreciation? The 800.
This is divided by.
It's a quarter of us.
Why did I do those? Why is it still?
You look.
April, May,
Yeah, June.
how many?
It's 3 months.
Yeah, 812 divided by 3. Well, I got 3. That's the annual depreciation expense. Yeah.
So did you?
How many months a year?
You know?
12.
Oh,
Oh,
wait, times
Oh,
3
yes,
divided by 2.
Yeah.
Yes, given the plus, yes, a bit.
Oh.
Right. Actually.
One day, she's. Well, I just thought.
Are you been going there for years?
Used to when I was like, okay, then it's sales.
Where are they asked about that? Yes.
It's a deep button. I believe that's right.
This team playing in the professionals where there's basically
How much do you think?
22,000.
Yeah.
you said
Okay, guys, is this that hard?
no, it's just tough.
Yeah? Huh? Yeah, because some of you have got confused with this, yes?
Mine's one of mine.
So, Nicholas, I think I'm in mistake.
Yeah.
I think I'm in mistake. I'm not in mistake.
Yeah. Shall we go through the question?
29,000. Those numbers. Prepaid. Wait, where's the net cash flow?
But why do we have bank cash flow statement, but it's the delivery that is even separate thing?
It's a cash flow operations. Yeah. We get ended 2025. June 25.
Cash flow statement, I will do that.
Okay, guys, firstly, what happens? You receive the loan, yes? Everyone is okay with that? What's the date?
So is it? What is it? So you don't have to do it. Right, just say for the. Preparing cash flow statement. Wasn't just another. I'm actually cooked.
And punching sauce and full sense on that bird.
What is this? Bro, how long is prepaid sales from the? 1 year. From 1 to 1. So it's from the, such a work. Is it, this is 300 for contract. No, there's no. It's 300 stuff. Okay, 300 on fence. No, that's why it's 3 lines. Or is it 3 lines? What?
Yeah, they're not even asking for that, but it's a component. That's asking for the it's asking the EFT transfer. They're asking for deals.
Is it even banking? Is it like?
It's not investing. It's not investing.
Like operations? Think
Fine.
that's the proxy role. It's exactly what I'm extremely pleased to. There's no doubt about it. What does it enjoy? Wait, where did you go? Then I both think that now get it. Question is
Okay, guys. I hope everyone is okay with part A. Right? Part B, how much is it? The cost of the van? 22,500. Yes, why? Because you are adding shelving and the delivery van's cost. So both of them come to 22,500. Okay? Right. You are not going to add the service contract. Why? Because it's recurring nature. Reoccurring. So then reoccurring items are not added to the cost of the non-current asset. Then part C. What's your treatment for the cost of the delivery van? Yep. How did you treat it? Yes. Yeah. Cost of the delivery van, which is how much? Yeah. 2,500, yes.
It's no way. What is happening? Thank you. I live between these things. I can't even find. Why would I bring it?
Is recorded as the historical cost. Of the non-current asset of the van.
What is actually in the card?
And it is treated as a non. Sorry. Non-current asset. That brings the van into condition and location ready for use. That provides future economic benefits. Sorry. Okay, guys, next one. Part D. Yeah, what's part D? Purchase, record the purchase of the delivery van. So what's the purchase of delivery van, guys? This is the one. Right? What do we do? Okay, what are the ledger accounts you will relate here? Tell me. Ledger accounts here. Delivery vans, prepaid service contract, GST, bank. Very good. That's it.
Oh my God. Exactly. This the one. It's meant to be cash. That's right, of course, I wrote. You have to write the date again.
Yes. Do you have to write the date again?
Yes.
Yes. Why? Separate source documents. Correct. So remember, for every, or I mean, each and every separate set of double entry, you need to write the date, even if it is on the same day. Okay. I have told you. 1,200. Yes. Then GST clearance is 2370, and you create the bank.
I'm just asking for compensations. So we have. That's. Essentially. Something. I can give like two things.
Yep.
And you try all of that mission, but it makes sense.
Just wrote it, yeah, better. Tax invoice X36, yeah.
Wait, tax invoice, you receipt,
Is it a receipt? No.
because it's cash sale.
Cash sale. Yeah, but they haven't given us a receipt number. No.
But like, tax invoice X36, that's so,
Yeah, so that's the only reference that we have.
so then you can just try X36.
Yeah. X36, I just put with tax invoice X36.
Wait, so there's a separate tax invoice now. So,
Sorry?
cause like, tax invoice is a source document, this is some state's GST, right?
Yes.
So can you just have a tax invoice, but not a receipt?
Maybe just tax invoice. Yes, you can have. You can have just tax invoice. Then maybe at the end, they might say, see for the amount received, they might say receipt or EFT, whatever it is.
Amount. Wait, amount received,
Yeah, via EFT.
amount received, does that mean it's been paid?
Yeah, so amount received means like lorries, trucks received the money via an EFT. Yeah, there can be tax invoice by itself.
I got the books on down.
Okay, guys, any questions? Yeah, how much is I think there is a problem with the numbering. This one should be E, yes? E is missing. This should be E. This is E. Then what else? E, F. Yeah, this is F. And so on. G, H, S. There is no I. Yeah, GH only, yes.
GH.
And this one should be not 26, guys. This should be 27. Because it's the same thing.
No, it's just from.
Okay.
It's the depreciation. But you guys is money. So you have to say that.
Okay. So what's the homework?
Yeah, this one, guys, hold on. This one is not 25. This should be 26, okay? For G, it's 26, not 25. Okay? Yeah,
You change.
26, yeah. I changed the balance sheet was also wrong. Not 25, 26 for part G, then next one 27. Okay, right. Then guys, how much is the depreciation expense for, when is it? Yeah, when is that referring to your answer to part D? No, part E, sorry. Depreciation of when, 26.
That's fast about it when back this. Likely. This.
Yep. Yes, how much is the depreciation, guys?
Anyways.
You are the one who asked me questions about the proportionate depreciation. Did you get it? How much? 800. I will skip. Okay. So how do you calculate the depreciation, guys? Yes, historical cost. Take away residual value over useful life. Yep. Okay. So then historical cost. How much? 22,500. Residual value 6,500. Yeah. So then 16,000 divided by 5, which is 3,200. So annually is how much? 3,200. So 3,200, 3 months, yes? Yeah, 800. 3,200 for 3 months, you divide by 12 times by 3. So 4 goes into the 800. So 800 is the depreciation expense. Okay. Right. Next one. How do you report this one in the cash flow? As of, again, the date is wrong, guys. 26, okay? Not 25, 26.
Oh, but I just crossed down to 25, then crossed to 26, then I crossed down to 26. Down. Oh, God.
No, I didn't cross out 25. Sorry, 26. Just 25. Everything I cross is 25. 5 replaced with 6. Okay, how do we report this one, guys, in the cash flow? Now we have done cash flows, yes?
Prepaid says work.
Prepaid. Prepaid service contract. How much? How much? Sorry? 1,200? Or are we reporting only the thing that we have incurred? Yes, cash. Very good. 1,200. Yep. If you want, you can put within brackets. Payment. Then what else? GST clearing or GST paid? How much?
Wait, you have to say.
Yeah. Yeah, GST paid. Correct. Yeah, how much? 2370. Thank you. And what else? Net cash. Net cash, oh, don't worry. Then, sorry, investing activities, what is it? Delivery van. How much? Sorry, 22,500. Anything else? No. Sorry, there is another thing. If it was given, what is it? Any other item is coming? No, depreciation is not covered. Why not depreciation?
It's does not pay cash.
Oh, no, not that, not that.
What else is coming? If you were going to ask, if financing was given,
No.
loan. If financing was given, loan. Actually, I miss it. I should have given. Right? Financing also coming. Okay. Financing is coming loan. Okay. Right. Then balance sheet as at 30 June 26 for the current assets, guys. So what do we show on the current asset?
It says for service contract.
Prepaid service contract.
You know, receive.
Yep. How much? 900. Yeah. Everyone is okay with that? 900. Yeah, because 1,200 has been paid for 12 months on 1st of April, right? So then after lapse of 3 months, it is only 900. Then non-current assets, what is it? Delivery van, yes. Delivery van, how much? 20 to 500.
Says
And then less accumulated depreciation. Accumulated depreciation, how much? Depreciation as of 27 June. 4,000. Everyone is okay? Why? So the first year it was 800, second year it's at 200. So altogether 4,000. 18,500. Good.
So what's for how about this?
Shall we do another question?
Oh.
No one is saying yes, only me. All right then. For homework, guys, yeah. Try the question number 4.
We based it on.
You can try 5 yourself if you want. Yeah, we need 4.
Oh, well, I don't think. Oh, wait, yeah.